Hello, my YouTube friends. I hope you're doing well. While I anxiously await Apple's earnings, today I'm going to talk about the Fed Reserve report yesterday, along with Starbucks earnings and what we saw in that. Stick around, we'll have a great video. Good morning. My name is Adam Kahn, and this is Investing with Adam K. I hope you're all doing well. Today, I want to get right into the discussion about the Fed report yesterday, along with Starbucks earnings and how they interrelate. I'm glad I waited until today to see how the markets reacted, because I'm super excited to see bonds and how they're getting stronger and rates are falling off, which tells me that no matter what was said in the conversations, that the markets seem to think that they're going to end up having to cut rates and maybe sooner than later. The bonds are really getting stronger, stock market's getting stronger on top of that. I think that's about the extreme of the panic that we're going to see in terms of the markets. I think you're going to see the stock market and equities continue to go higher, as well as bonds pushing yields lower and the market doing just fine. I think what the Fed's seeing is the GDP numbers slowing. That really indicates that we are having the slowdown that's expected. And that's why I say it interrelates with Starbucks earnings, as well as McDonald's and some of the others that show that they're not growing at the rates they were. Now, some companies like the tech ones, while you look at Meta and Google and Amazon, they're having great earnings. I think that's to be understood no matter what's going on with the interest rates and everything else. So I still think we're in line that the next move is more than likely a cut. I know that the media and everybody else has been a little bit nervous about saying, oh, the next move is going to have to be a raise because inflation is sticky and it's worse than they thought and they're going to have to raise rates. But the reality is, unless we see inflation actually uptick and start getting into the fours and fives, that's actually kind of a silly thought process. We're already restricted. You know, PCE, CPI, they're all in the threes, and our current overnight lending is above 5%. There's really no reason to raise it higher unless you're trying to cause a market crash, and I don't think that's really their goal. Their hope is to do a soft landing. I don't know if that'll happen or not, but what's really interesting is, despite people feeling the pinch, the overall economy is doing pretty well. Some companies are struggling, some companies are still doing just fine, and there's a bit of a divergence from that, which brings me to Starbucks. And as a shareholder, what a disappointment. And I don't mean what a disappointment just on the earnings, but if you happen to catch the CEO's conversation with Jim Cramer, it was just sad. It was really disappointing. He didn't address any of the real problems. I don't understand why they didn't come to the market in advance to let them know that they were going to be missing that bad and maybe prep a little bit better. And his answers, when pressed about things about the occasional customer not seeing their value proposition, and like, what kind of comfort is that to a shareholder moving forward, that you really have some plan in place to drive those earnings? Maybe there were some things going on in other countries and possibly people who are boycotting, but I think that's a really small percentage of sales. And to try to make it sound like it's much bigger than it is, I think is a really pitiful excuse. And it was terrible. Like, really, that whole interview was so disappointing, giving absolutely no comfort to the people who own the stock, or any comfort that they'll actually be able to turn things around. And when you look at their current cash flow, that's getting used for the dividends that they currently pay, as well as paying off their debt, leaving no room to be able to buy back stocks if they want to try to support the stock valuation. I think the problem is they may be losing market share, and there's no comfort on what they're going to do to actually try to stop that from continuing and actually push it back in the direction of growing their market and continuing to grow the company. Maybe their prices are just a little bit too high, and there was no recognition of that, and no potential giving people a better value for their money. He notated the app and essentially said, well, we'll offer more little gimmicks and things to try to drive people in, but nothing really addressing the high prices and people feeling the pinch. Maybe a better direction would be to consider lowering some of the prices of the more expensive items to try to offset that and drive more people into the store. Whatever his quote unquote action plan is, there was nothing other than hearing about some action plan that gave any understanding of what that might be. So, no making comments about they don't see our value proposition and we have an action plan in place really is not a wonderful answer as to A, why did you not let the shareholders know in advance that you were really going to have a bad quarter and prep them for it? And B, what direction you have to address it. This just sounded like excuses and things that it's like, gee, we don't know what's going to change in the world and, you know, we got a plan in place. Like I said, I wish it was a little bit more of a better description of what that actual plan is, because I'm sure that pretty much anybody could have some ideas on what they could do to drive business. They're a great brand and a great company, but there's a lot more competition out there. You know, even McDonald's is expanding to have more coffee brands and more options in their locations, as well as I think they're going to come out with somebody to compete with them. And you have Tim Hortons and you have all of these other ones that I think they just have to pay better attention and not just assume they're top of the chain. This gives me a little bit of a concern going forward about their ability to grow over the next 5 or 10 years. Um, Unfortunately, I think there is potential, but I think the CEO did such a terrible job. It doesn't make me comfortable that he's the guy to run that ship going forward. And as a stockholder, my votes would be let's get somebody else in there to try to push that ship forward because I'd feel a lot more comfortable with somebody who actually gave some answers and addressed the questions that were given to him instead of avoiding them with double talk and things that really didn't give any clarity on their direction. And in terms of the Fed speak, I love watching these things because I kind of laugh at the end of them. The reality is they didn't really say anything new. Essentially, they're going to continue to watch the data to see what their next move is. He thinks that the next move is more likely a cut as opposed to having the raise. But then you have all these newscasters and all these financial guys start asking really specific questions about if this happens, then will that cause inflation and will you end up having to raise rates and what? And they try to put him on the spot and try to make him say something, but it's kind of a silly question if you just understand anything, because the real answer is there isn't one thing that controls the economy. And while rates may end up having to go higher if things get changed and inflation starts rearing its ugly head again, their mandate is to try to get down to a lower inflation to maintain price stability and pay attention on employment. So if you notate one small item and try to say, will that cause this or that or the other? Probably not. The economy is much more intricate than any one individual item. And if you see CPI going higher as GDP grows and unemployment stays low, sure, they might get stuck in a position where they would have to raise rates. But the reality is that doesn't seem to be what's happening. What's happening is, fortunately, employment is staying okay, but their concern is there could be a rise in unemployment, which could cause them to have to cut quicker or sooner than they expect. Hopefully, that doesn't happen. And they expect to inflation to continue to get better and better, getting closer to their 2% target. They just think it may take longer than the markets want it to take. Now, I've seen the 10-year go from 6.6% in yield from when the meeting started to just before I started doing the video, it was below 6% in yield. It was actually below 5.8% in yield just in a day and a half. That tells me the markets are relaxing. They kind of see the same thing he does, that maybe it takes a little longer than expected, but things aren't as bad as people think. And hopefully the next move is down. Hopefully we see mortgage rates do the same. But I wouldn't be sitting on the sideline. And here's what I think. That's why you're seeing equities move the way they are today. They did the panic in that short amount of time, and all the nervousness and the people who needed to get out of the market did the day before and going into that meeting. And I'm guessing the fear and greed index changed a whole lot in the past week or two, getting back to a normal level. And I'm guessing we see equities continue higher. So anyway, I hope you liked the video. I hope you guys have been paying attention to Boeing. I think the negative news is finally washing itself out and the sellers have exhausted themselves. Let me know what you guys think about the economy. Tell me what you think about Starbucks. Do you see this as a buying opportunity? Typically, when I see a big fall like this, I'd like to buy more of it, but that guy sure didn't make me feel more comfortable. I'm sure I'll leave it in the safe deposit box. I'm not making any changes, but my God, that was like the worst interview and the worst thing I've seen. I'm not real thrilled about it. I don't think I'm going to sell, but sure not getting me to run out there and buy it, even though the prices look low. What do you guys think? Anyway, before I go, do me a favor, give a thumbs up, subscribe if you haven't already, and make those comments. Thanks again. Bye bye.